Hello everyone, welcome back to my channel again. You might have seen some of my videos where we completed the accounts payable basics. There are some videos if you want to go refer, you can go and refer. Now, since we've completed the accounts payable section, we are now going to the accounts receivable section. So now I will start a series of ebooks which are primarily focusing on accounts receivable. So if you have not subscribed to my channel, please subscribe. Let's see what are we going to learn from today's video. What are we going to learn? First, what is accounts receivable all about? What is order to cash cycle all about? What are the daily tasks in accounts receivable jobs? What are the primary key terms that are used in accounts receivable? And like we speak in all our videos, we will also talk about some of the important interview questions that you can expect. Now let's see what is accounts receivable all about. Accounts receivable primarily is referred as AR. Accounts receivable is a process of collecting money from customers who have purchased goods or services from you on credit. In simple terms, if you have to understand, your company sells something today but gets paid later. That's pending amount that we need to collect from our customers. That's the primary uh, explanation for what is accounts receivable all about. If you have to talk with an example, what is an example of accounts receivable? I'll give you a simple example. Your company sells product worth 1000 and agrees to receive payment in 30 days. That 1000 is now your accounts receivable or AR. What is the order to cycle all about? There are two cycles in finance operations. One is P2P, which is procure to pay, that comes in the accounts payable category, and OTC, which is order to cash, that comes in accounts receivable cycle. So the cycle first starts from the order management, where customer places an order. If you remember in the AP section, it is most of the content here will be on the opposite side. Here in this case, we are from AR, so we are delivering the goods. So everything that we saw in AP, it will most likely be the opposite side. Now the cycle starts from order management, where the customer places an order to you, and then after that is done, then there is a credit check, because you are selling on payment terms, you are not taking immediately money, so it is important that a credit check is done. What is credit check, we'll talk later, but for now, if you can just understand simple terms, credit check verifies customer credit worthiness or the limit that we can assign to customer. After that is done, because you've received an order, you now have to fulfill the order. So the next step is fulfilling the order. So once you completely fulfill the order, the next step is billing. So without invoicing, without billing, you don't get paid. So it is important for you to send an invoice to customer. And then fifth step is collections, which means there's an order, there's a credit check, you fulfill the order, you send the invoice. Now it's time to collect the money. That's the fifth step. So after you have collected the money comes in bank. It doesn't automatically get offset. So there is a process called cash application, uh, where we'll talk. There are detailed videos, ebooks on each of these eight topics. So we'll talk in detail. For now, you can understand that this is a money that is received in bank, and there's a process to offset your AR with the cash that is received. And the seventh step is dispute management. The money doesn't come easily. Uh, there are definitely a lot of cases where there is a dispute that is raised by the customer, and there is a dispute resolution process also that gets involved in the order to cash cycle. Finally, it's a reporting, where you do a lot of reporting to analyze, you do reporting to see your performance, and there are KPIs that you track, etc., etc. So that ends the order to cash cycle. Now let's see what are the daily tasks or jobs that somebody in AR does. So stage one, which is a first task, generating and sending invoices, which means somebody who generates the invoices, it is important to send the invoices also. And the second step is monitoring outstanding balances. When you say outstanding balances, if you remember, the goods are sold on credit, it is not on cash. So you will have to continuously monitor the amount of balances or the outstanding that you're supposed to receive. And the third step is follow up with customer for payments. So most of the times the payment doesn't come without your follow ups. So it is very important to follow the right collection strategy where on timely basis you keep reminding customers for the payments. And the fourth stage is applying money. So once you get the money also has to be applied or offset against the open AR that you have. Without this process, the entire cycle is incomplete. And the stage 5 is resolution of dispute. In case you're not able to collect the money, uh, the customer raises a query, he is not satisfied with your invoice, he is not satisfied with the quantity that you build, etc., etc. All those reasons that we have seen on AP holds, so those reasons will be opposite side on the AR. So it is very important for us to resolve customer disputes on time. If not, the invoices doesn't get paid. And the final stage is you create reporting, you do analysis that what is your aging all about, how many balances are due, when are they due, when are you getting paid, etc., etc. We'll talk a little later in this video what are the uh, key KPIs that are measured in the accounts receivable. Now let's see what are the key terms that are used in accounts receivable. So it starts with invoice. What is an invoice? Invoice is a document sent to customer for payment. Like you might have seen in the AP side, you need an invoice that the vendor has to send you for you to make payment. In this case, it is opposite where you have to send an invoice to get paid. Second important term is DSO. DSO stands for Days Sales Outstanding, which means this is a measure uh, that helps you understand what is your average time to collect payments. What is DSO in detail, we'll talk in the next videos. But for now, you can understand that this is an average time taken to collect any money or any invoices that you have billed. The third important step is credit limit. Credit limit, it is a very important uh, part or term of any business or organization. Without credit limit, there is a serious threat to the business. So the process is where for every customer that you have to set a primary credit limit. For example, you have a credit card that has a maximum limit. After that limit is exhausted, you will not be able to use your credit card. So likewise in accounts receivable, almost every customer has a credit limit that is set. What is a credit limit means? You can say it's a maximum amount a customer is allowed to owe or purchase. Now let's see what are the common interview questions. Let's talk about first question. Like I said before, DSO is a very important topic or term in accounts receivable. So first question is what is DSO and why it is important? So the way you can answer is DSO stands for Days Sales Outstanding. It shows how quickly a company collects money from customers. Lower the DSO, which means faster your collections. Now let's look at the second question. Second question is how do you follow up on your overdue invoices? So this is a simple question but very important. Uh, the way you can answer is uh, I manage the overdues by calling or emailing the customer politely, sharing invoice copies, and confirming payment timelines. So it is very important where you share the statement on time, you share the invoices on time to customers so that they know that their invoices are falling due and they are expected to make the payment. Now let's look at what is the third question. Third question is what is a dispute in AR? AR stands for accounts receivable. Like I explained in my this video earlier, when a customer disagrees with the invoice amount due to incorrect billing, incorrect delivery issue, or quantity concern, we need to resolve it with internal teams, which means you sent an invoice to customer, he is not satisfied, and he rejects the invoice. There are multiple reasons why the invoice is rejected. If you remember in our AP section, when we are paying invoices, there are very important information that should be available on invoice. If the important information is missing, uh, we don't pay. Likewise, from AR point of view also, it is very important for us to send a compliant and invoice that has all the details required. So for example, if the billing address is incorrect, the customer doesn't pay. If there are delivery issues, like you bill 10 quantities, they only received 8 quantities, they don't bill. If there are some quantity concerns, they don't pay you. Likewise, it is very important for us to issue an invoice which is compliant and correct. So let's look at what is the next question. How do you apply a payment to multiple invoices? How do we apply payments? There is a next video that I'm going to make on cash application. That is when you will learn it more in detail. But for now, you can understand that uh, this is a process within the AR which is super important. We'll talk about the question once again. How do we apply a payment to multiple invoices? What does this question means is the customer paid the payment for multiple invoices. I will give you an example. You received a $10,000 payment, and in the remittance, customer has mentioned 5 invoices, which means per invoice the amount could be 2,000. So you received a 10,000 payment for 5 invoices. That is called multiple invoices. The way you can respond is, we break down the payments as per the remittance advice and match each portion to the correct invoice in the system. Like with the example that I shared before, not necessarily each invoice is billed with a 2000 value. I've just gave you an example. The value can differ, but the context is you received one payment, but customer is trying to pay 5 invoices or multiple invoices with one single payment. Thank you so much for watching the basic introduction of accounts receivable. In the future videos, we'll talk about the individual topics in detail. Please like, share, and subscribe. Thank you so much. Have a good day.